Since April of this year, Ethereum has been outperforming pretty much everything else. Everything within traditional finance, everything within crypto as well. And that was all fueled by the treasury companies. The Ethereum ETFs purchased on the back of the treasury companies as well. But a change recently has happened. What used to be a narrative of many companies buying into Ethereum has now narrowed down to a single entity that continues to buy, and that is Tom Lee's BitMine. And because of that shift, the Ethereum dominance isn't climbing anymore. So the fraction of all of crypto that's in Ethereum has stopped growing. So that's what we see in this chart. We have bounced in April of this year when Ethereum dominance was just slightly above 7%, a very similar level to where we bounced at the end of 2019. But the excitement that started in April of this year seems to now slow down again. The Ethereum dominance has been trading between 21% and 7% in the last 7 years. This dotted line over here, by the way, is the average Ethereum dominance, which is close to 15%. And so here's the problem. This is the number of Ethereum that's bought by the Ethereum treasury companies. And while this doesn't necessarily look like a problem, the issue is that all of this is driven by a single entity, namely BitMine. Once we remove BitMine from that chart, we have seen 0 purchases in the last month. That's also when the Ethereum dominance started to decline. In the last 4 to 5 weeks, we have not seen any outperformance of Ethereum anymore. And the situation is very different for Bitcoin. Have a look at the equivalent chart for BTC. So the number of BTC that's held by the treasury companies. We see all treasury companies here in orange. When we remove the largest entity, so that's Michael Saylor's strategy, we still see accumulation. We do not see solely one company buying into the asset. We see more broad purchases for Bitcoin. There is a problem with a potential sell-off of Ethereum, and that problem spans way beyond Ethereum itself. Many crypto assets are very highly correlated with ETH. The Ethereum dominance is in green. What we see in blue, that's the others dominance. So the dominance of all the altcoins that are not in the top 10. Just have a look at how highly this is correlated. This bottomed out at a very similar time when Ethereum dominance bottomed as well. It also topped at a very similar time to where Ethereum topped. So if the bear case prevails and it's only Tom Lee that's buying into Ethereum and all the long-term holders of ETH are selling off, this will have a direct impact on the altcoins as well. And here's the reason why. Many altcoins are traded directly versus wrapped Ethereum. So when Ethereum goes down by 10%, for example, in US dollars, then automatically those altcoins also go down by 10% in US dollars. The pricing of those altcoins does not happen versus the US dollar, it mainly happens versus wrapped Ethereum. That's true for the tokens on the Ethereum chain. It's also true for all the tokens that are on the layer 2s, so on Arbitrum and on Optimism, etc. If Ethereum dominance goes down, then the others dominance will go down as well. It's already declining since the beginning of 2022. The smaller altcoins that are not in the top 10 underperformed the rest of crypto by almost 60% in a bit under 3 years. And there's a good reason for that underperformance. It's the token dilution of the altcoins. So not only are altcoins a very bad diversifier against Bitcoin and Ethereum because of the high correlation, also we tend to see all of that profit taking by the early investors, by the team that tend to get token unlocks, that tend to get vesting unlocks, that then sell those tokens over time and depress the altcoins versus the rest of the market. This year, according to Tokenomics.ai, is the weekly unlocks of the altcoin market. It tends to be above 1 billion every single week, while the Bitcoin inflation, for a comparison, is only at 300 million per week. So the altcoin market is much smaller, the others market cap is much smaller compared to the Bitcoin market cap, yet the selling pressure through newly issued token is much, much higher. Still, given that we see mainly profit taking in Ethereum after this rally, the altcoins might hold up comparatively well. What we see here is the Ethereum market cap relative to the others market cap. So even Even though the two asset classes are highly correlated to one another, there is a somewhat tight trading range that tells a story when Ethereum is comparatively expensive and when the altcoins are comparatively expensive. And right now, ETH tends to be at the upper end of that trading range. And there's a good chance if momentum heats up that Ethereum underperforms the alts by 47%. The average ratio is slightly below the current ratio. So the equilibrium could be somewhere around 8% below the current ratio. Now my impression is that because the accumulation of Bitcoin through the treasury companies is much more constant compared to the accumulation of Ethereum, that the Bitcoin dominance is likely going to go up from here. Historically, we have seen an altcoin season only happening when the Bitcoin dominance was close to 73%. We haven't hit that level yet, and we did go down in Bitcoin dominance quite a bit because of the Ethereum treasury company story that's currently questioned more and more. So maybe we see another leg up in Bitcoin. Maybe Bitcoin will outperform the rest by 24% or so before the alts are a proper risk versus reward bet. Really, we are in uncharted territory for Ethereum because since the merge, so that's the arrow here in red, we have only seen Ethereum underperform in the grand scheme. This is ETH relative to Bitcoin, and there was so much excitement when Ethereum moved from proof of work to proof of stake. The merge then was a sell the news event, and since then we saw mainly underperformance despite the improved tokenomics on paper. And the treasury story has of course helped Ethereum gain some ground. And yes, the average ratio of the Ethereum market cap relative to Bitcoin implies that ETH could do somewhat better. But we really don't know if Ethereum has the potential to reach prior heights post-merge. Because one of the main drivers for the adoption of Ethereum was the mining. So everybody could simply just mine Ethereum on their computers, could make some money on the side by selling electricity, converting this into crypto. And then once you had Ethereum, you might have as well used it to try out the different DeFi projects, etc. But now this influx of new investors through mining is pretty much dead. There is no mining anymore. There is no proof of work for Ethereum anymore. And so the ecosystem has to rely on other growth drivers, like the purchases through the treasury companies that unfortunately do not look as solid compared to Bitcoin's purchases. Now, there isn't just the treasury companies. We've also got the exchange traded funds, the ETFs. This is another way how money can flow into this space. And we've got ETFs both for Bitcoin and also for Ethereum. Let's compare the flows. So in the last month, we have seen an annualized supply absorption of 2.8% for Bitcoin. Bitcoin's mining is at 0.85%. So we see more purchases through the ETFs than supply expansion, which makes Bitcoin more and more rare over time. Over here, we see the annualized purchases of the Ethereum ETFs. That was only at 0.4%. Ethereum supply expansion isn't that predictable because we've got the staking rewards minus the burning of tokens while using the chain. In the last month, the supply expansion of both assets had been very similar. And so really with the Bitcoin ETF, we have already quite a bit of history, and we do know that over time we see more and more accumulation. And this brings a lot of confidence into the asset that makes Bitcoin a long-term hold. That's why we can dollar cost average and hold Bitcoin very long-term. For Ethereum, the trend isn't that clear. Yes, we have seen purchases because of the treasury company story, but those purchases recently have slowed down, and we don't know what happens over the next months and even years. For Bitcoin, the trend is much more clear. And that's why there's so much potential risk in Ethereum and as an extension in the altcoins as well, due to the high correlation, due to the coupling in the liquidity pools. I put my money where my mouth is, so I'm betting on Bitcoin outperform most other altcoins. If you want to know how I do this, feel free to check out the premium membership. The link is down below. It's thebitcoinstrategy.com. A link to premium should pop up directly here on the screen. Just click on that. It will lead you to the website. If it's the very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. Cheers.